And we're going to bring you a little bit more on that. Bit of a downfall, of course, to tell you about. And joining us here on set is our business editor, Charles Pellegrin. Charles, bring us the latest.
That's right, Stuart. This happening a day before Bankman-Fried was scheduled to appear before Congress to testify about the sudden collapse of his cryptocurrency exchange, FTX, last month. Now, the 30-year-old, nicknamed SBF, was one of the darlings of the crypto industry before all this, becoming a multi-billionaire thanks to the boom in Bitcoin and other digital assets. But FTX filed for bankruptcy on November 11th after it struggled to raise enough money after traders rushed to withdraw $6 billion from the platform in just 72 hours. The charges for his arrest will be unsealed later this Tuesday. Brian Quinn tells us exactly what went wrong at FTX and how SBF ended up in the sights of investigators.
A massive unraveling at lightning speed. Just months ago, FTX was the world's third largest cryptocurrency exchange, valued at some $32 billion. Launched in 2019, by 2022 the company was processing $10 billion in daily transactions, making its founder, Sam Bankman-Fried, a personal fortune estimated at $15 billion. But it wasn't his only venture. SBF had also founded a hedge fund, Alameda Research, which made major trades in crypto markets, often on the FTX platform. On November 2nd, the cryptocurrency news site CoinDesk revealed a troubling weakness. A huge chunk of Alameda's assets consisted of FTT, the cryptocurrency token issued by FTX itself. Any drop in the value of FTT and Alameda could find itself illiquid. Within days, SBF's rival, Changpeng Zhao, founder of the world's top crypto exchange Binance, announced his intention to sell $500 million worth of FTT, sending the token's value tumbling by 80%. That move sparked a bank run, as over the next 3 days, FTX customers rushed to withdraw $6 billion in assets. Facing insolvency, FTX turned to Binance for a rescue, but Binance pulled out of the deal after discovering an $8 billion black hole on FTX's books. That black hole, an apparent result of FTX giving Alameda unlimited access to FTX customer funds, illegal under U.S. securities law.
Well, SBF's arrest won't do anything to stop the calls for stricter regulation of the crypto industry or to reverse the drop in value experienced by major cryptocurrencies in the past year. Bitcoin fell 64% in value since the beginning of 2022. The collapse of FTX last month has led to a record number of withdrawals of Bitcoin from major trading platforms, with investors concerned about the safety of their assets. In November, they took out over 91,000 Bitcoin worth close to $1.5 billion from centralized exchanges like Binance, Kraken, and Coinbase, which would be the largest outflow on record. Well, earlier, France 24 spoke to Han Tan, chief market analyst at Xfinity Group, about what might happen next.
His arrest suggests that, whatever answers prosecutors and or policymakers or the public may be after, at least they have the man who's in the know. But I also keep in mind that regulators have a lot at stake. They have to be seen doing something and reacting quickly, more so than perhaps implementing the actual regulations, which, could be a 2023 or later story, right? But I think overall, I think the industry as a whole has to brace for more control, more oversight, if it's to restore the confidence that's just been decimated in the wake of this FTX saga.
And moving on now, the EU has found an agreement on a so-called carbon tax for industrial imports at its borders. After long overnight negotiations, the new mechanism would impose a levy on these imports to make up for the carbon emitted in their production and to be in line with EU market standards. Most affected sectors would be steel, aluminium, cement, fertilizer, and electricity, as well as hydrogen. The new rule will be first tested in October 2023. And China hits back at the U.S. after Washington imposed export controls on advanced semiconductors to the country. The latest in the tech rivalry between the two superpowers. Beijing has filed a complaint at the World Trade Organization, saying it was a legal and necessary measure to defend its, quote, legitimate rights and interests. And at the same time, Reuters is reporting that China is working on a $143 billion support package for its semiconductor industry to counter those U.S. efforts, this in the form of subsidies and tax credits to bolster local production and research. And let's end by taking a look at the markets this hour. We're seeing mixed trading in Asia, with the Hang Seng in Hong Kong trading in positive territory after Chief Executive John Lee announced more lifting of COVID restrictions, for instance, scrapping its mobility tracking app and no longer barring new arrivals from some venues. As you can see, the Hang Seng up by 0.2%. Investors also looking ahead to new U.S. consumer price data later this Tuesday and a Federal Reserve meeting on Wednesday, and perhaps expecting positive news from that U.S. inflation data, at least if we're to judge by the positive open in Europe. You can see the CAC 40 in Paris up over 0.2%, the DAX in Frankfurt up 0.4%, and the FTSE in London just above 0%. We'll keep an eye this week on that Federal Reserve meeting on Wednesday in the U.S. and whether or not they'll increase their interest rates again.
Charles, thanks so much. Charles Pellegrin with the business on France 24, shooting straight through.